At that point, I think it's just kind of like a growth industry. I mean, it'll be a nice growth industry 2030 to 2040. But right now we're in hyper growth, early stage. It seems to me that it's pretty obvious there's $100 trillion worth of monetary energy or wealth that would be better served to be sitting in a synthetic digital asset like Bitcoin than to be sitting in real estate or gold or equities that are currency derivatives or other kinds of weak currencies. So you got 100x opportunity or addressable market from here under, even without considering inflation. By the time we get there, it'll probably be 200x. So I don't think we're too early. I think we're 1-2% into it if you look at it weighted. If you look at it from a time point of view, if you're an institutional investor, the first 10 years of a crypto network, you probably have to just sit and stare and see if it's going to break. So it was engineered, January 3rd, 2009, but you had to wait until about 2020 before you were sure it wasn't going to be hacked, banned, broken, copied. And so I think 10 years later, it starts to become interesting. We're year 2 of institutional adoption, right? Year 1 maybe started with MicroStrategy, bought $250 million of Bitcoin in August of 2020, and that runs about a year. Like we're 18 months into our journey here. So you're in the middle of year 2 of institutional adoption. There's 10 years of education, and in those 10 years, what happens at the end of year 1, well, Elon Musk gets involved, and then all of a sudden there's 24 Bitcoin miners that are publicly traded vehicles about now. There's another dozen companies probably come public. So you're watching the institutionalization of the asset class. We're waiting for guidance from the SEC, the FDIC. The executive order from the White House last week was a massive milestone. Biden's election was a massive milestone, but the executive order was a double massive milestone because that directed 18 agencies to figure this out. That'll be 24 months. By the end of the first Biden administration, I think we have 80% of the regulatory clarity. That means that from the year 2024 to the year 2028, 80% has been figured out. And by the year 2030, maybe 90% has been figured out. And at that point, I think it's just kind of like a growth industry. I mean, it'll be a nice growth industry 2030 to 2040. But right now we're in hyper growth, early stage, lots of questions, lots of people don't understand it. But I love that part because I think this is the stage. It's like 2011 Google stock or 2011 Amazon or Apple or Facebook. Just at the stage where it's kind of unstoppable. It's necessary. A reasonable objective person would say Google, Amazon, Apple, Facebook, they were all useful and necessary in the year 2012. And yet only 95% of the people were underallocated. And then those things worked for the next 8 to 10 years. And then by the year 2021, every 21-year-old Uber driver, if you asked him, would have said, oh yeah, I own Facebook stock or I own Amazon stock, or they get in debates about whether Google's better than, Apple. The inflation and currency devaluation is the number one issue. And I will give you an interesting statistic, Guy. Do you know that Zillow thinks that my house is 305 times more valuable than it was in 1930? So a lot of times, if you go look at Bureau of Labor trade statistics, they'll tell you that the dollar's lost 95% of its value over the last 80 years. But that's actually not true. The dollar's lost 99.7% of its value if your benchmark was Miami Beach real estate or any scarce desirable asset. I bet the story's not that different for New York City or Hamptons real estate or Picasso's or the like. So inflation's an issue, and I figure the CPI is 8%, but the real inflation rate in assets is 15 to 20%. We know that all these currencies are weakening, right? Every Eastern European currency is weakening. The yen is weakening against the dollar. I mean, everybody is weakening, and the dollar is losing 20% of its value. So I think the macro environment says I got to find an inflation hedge. The political environment, on one hand, is Massive endorsement for digital assets by the White House last week when President Biden said 40 million Americans need digital assets and we're going to embrace this. And I think a massive advertisement for Bitcoin with the Ukrainian-Russian war, and especially the sanctions, where we seized $300 billion worth of treasury assets from the Russians. Chinese have $3 trillion worth of assets, and that might have got their attention. If you're any nation state in the world and you think you might ever be in conflict with another nation state, and you're holding their credit derivatives or their currency derivatives or their currency or gold in one of their banks, that's not really proper anymore. So I think that's got everybody scratching their head saying, I don't trust the currency as a long-term store of value, A, and I don't trust my assets to not be seized, B, what am I going to do? And then right in the middle of that, you see things like Bitcoin poking their head up saying, check me out.
Our central bank, our Federal Reserve, and other central banks try to stem the tide. Is it too late? Is the genie out of the bottle in terms of fiat currencies?
I don't think anybody wants a strong currency. I think that the U.S. is weakening their currency. The yield curve is dead flat, Guy. It was like 240 basis points for 1 or 2 year money and 240 basis points for 30-year money. And the irony is, in the face of that, where you've got 8% CPI, probably you've got 10 to 15% PPI, you've got 15 to 20% asset inflation, you've got a 2% long-term interest rate. In the face of that, you've got the Japanese holding 10-year money at 25 basis points, exercising yield curve control, saying they will literally buy infinite bonds to hold the interest rate at 25 basis points. And the result is, lo and behold, surprise, surprise, the yen is weakening against the dollar. And then, of course, the mainstream media narrative is this is really great for Japanese manufacturers. Now, it's not a problem. There's no inflation. And you look at it and you say, well, it's pretty hopeless. You've got like $100 trillion of currency, $100 trillion of currency derivatives in the form of sovereign debt, and another $100 trillion worth of equities and commercial real estate that are value based on fiat cash flows. So that's $300 trillion worth of assets with a negative real yield of anywhere from minus 15% to minus 20% properly understood. Improperly understood, the negative real yield is only minus 6 to 8%. Right? So that's your situation. If you're a rational investor, you have to stampede to property. And now the debate is just what's the most desirable property? Is it land? Is it art? Is it sports teams? Is it gold? Is it Bitcoin? Is it some other crypto? Have you invented coal fusion, in the next Tesla? And are you going to buy that? I don't see that we're going to stop the expansion of the money supply. I mean, no one's expecting that. No one's even talking about that. You should be leveraged long property in an inflationary environment. You want to be short the dollar. By the way, you want to be short the dollar because it's like negative 15% real yield, but even more like to be short the peso, which is probably a negative 35% real yield. So you want to be short a weak fiat currency via debt. And then you want to be long a property, ideally a non-sovereign store of value. Or if you're going to hold property in a nation, hopefully you either own the country or you trust the country. How valuable is $1 billion of real estate in Moscow right now, right, to anybody in the Western European region?